Futures waver as the world awaits Iran's response. 30 minutes until it started trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, markets remain calm in the face of rising geopolitical uncertainty. Energy is clearly in focus as the world awaits Iran's response to U.S. attacks. And President Trump threatens additional strikes unless Iran makes peace. Katie, what are you watching this morning?
Let's take a look at the cross-asset picture here because you're really seeing reversals across the board. I want to start with the S&P 500, now a little bit higher in pre-market trading. We were down by as much as 1% overnight, but you can see bouncing back a little bit now. Same story with crude, of course. It initially moved much higher over the weekend following that escalation. Now we can see those gains coming in. And then you take a look at the 10-year yield. Previously, we actually had yields a little bit higher on the day. We saw a bit of a reversal just before 8 a.m. Now yields down about 3 basis points. No clear reason why, perhaps just New York traders coming in and starting their week.
All right, in terms of the stocks that you would expect to see moving after the U.S. attacks Iran using, for the first time, 30,000-pound bunker-busting bombs. You don't see a lot of movement here. ExxonMobil obviously is one that you'd expect to be shooting up on higher oil prices, but oil prices really aren't that much higher. So you do have a gain, 1.5%. Lockheed Martin is up only about 2/3 of 1% right now. So a lot of these stocks have moved more since September 13th. But just in terms of the overnight move, American Airlines down 0.7% is what you expect. In terms of those moves, Katie, if you look at them over a longer period of time, you do see what you would expect, but not these one-day changes.
Fair point there that if you go back to mid-June, the move looks a lot more dramatic. But moving on, let's get to the Oval Office because the Trump administration is adamant that the U.S. will not enter into a war with Iran. Here's Vice President J.D. Vance.
Well, the president's been very clear, Kristen. We have no interest in a protracted conflict. We have no interest in boots on the ground. The president has actually been one of the fiercest critics of 25 years of failed foreign policy in the Middle East, which is why he did what he did. A very precise, a very surgical strike tailored to an American national interest. And that national interest is Iran cannot have a nuclear weapon. It would be a disaster for us and for our allies in the region.
All right, that does hit on the main question, really, right now. Can the U.S. avoid a protracted involvement in the war between Israel and Iran? For the latest from Washington, D.C., let's get to Bloomberg's Tyler Kendall. She joins us from the White House. Tyler, what messaging is the president putting out in terms of whether or not this is a one-off or he has to go back and execute more strikes?
Yeah, hey, Matt. Well, that's going to depend on a few different factors here. The White House has, of course, put forward that they want to see Iran resume talks about its nuclear program. And President Trump has threatened that if they don't come to the table, then there could be further action on the U.S.'s part. Now, we should say that Iranian officials have repeatedly reiterated that that's not going to happen. They're not going to come to the table unless the strikes against them stop first. But we haven't really seen an openness from this White House when it comes to supporting some sort of ceasefire. The second factor here, of course, is what those further damage assessments are going to look like. President Trump has said that the damage has been monumental, but we have also heard from U.S. officials, including the Defense Secretary Pete Hegseth, that have said that it's going to take some time to get a further, fuller picture when it comes to the damage. The International Atomic Energy Agency has said that their inspectors haven't been able to go into these nuclear sites, particularly at Fordow, to survey the full extent of the damage. And then lastly, what is potential Iranian retaliation going to look like, and how would that inform the U.S.'s response here? Matt and Katie, we should say that our analysts at Bloomberg Intelligence say that there could be a more tempered response from Iran going forward. But of course, there is so much uncertainty, but they are dealing with their own few different mitigating factors here, including a weak economy, some growing domestic discontent, and also the fact that we haven't really seen their strategic allies offer much more than rhetorical support at the moment.
Absolutely, and that certainly is the question that investors are asking as well. What will the response from Iran be? Bloomberg's Tyler Kendall, appreciate your reporting. And for more on the response from the nation's capital, Henrietta Treyz, Director of Economic Policy Research over at Veda Partners, joins us now. Henrietta, fantastic to have you with us. Obviously, we saw a major escalation over the weekend with the U.S. directly striking Iran. How is this being received by D.C. Republicans? Is this a unifying moment for the party, or are we starting to see some fracture?
It's not 100% unified. I'd say it's about 85% unified, though, an 80-20 breakdown in terms of what we're seeing from Republicans on Capitol Hill. The issue is we're in sort of this interim period right now where no one wants a premature mission accomplished soundbite out there. That's going to be very difficult for members to maintain as we get into them coming back into session at noon today on the House side and this evening on the Senate side. So they have maybe 10 hours before, 5 hours before they start getting peppered with questions about where they stand on this. And it's going to be really important for the president to telegraph to members what's going on and what he plans to do. But right now they're in wait and see mode.
Henrietta, I was talking to Peter Cheer earlier in the hallway here from Academy Securities. He thinks it's likely that we've crossed the Rubicon at this point and that we cannot avoid long, drawn-out involvement in the Middle East militarily because of the end of the nuclear non-proliferation treaty. Do you hear others in Washington, D.C. Voicing the same concerns?
I do hear that concern. One of the things that I heard from a former State Department official who was there when they decided to go into Iraq is, anytime you smell roses in the Middle East, ask where the funeral is. Just really be careful about when you get optimistic that things are going really well. And I think that speaks to why members are being so reticent right now to make any declarative statements. I think there's a substantial muscle memory about just how bad this could get. Obviously, everybody hoping that it will not, but definitely thinking about the troops right now.
And of course, we are only 6 months into the Trump administration, but I do want to talk a little bit about midterms, because this is something that has been making the rounds, particularly on social media over the weekend, that President Trump and Vice President Vance ran on the platform partly of being the peace party. And here we are directly involved in this conflict now. I mean, how do you think that this is going to be received by voters at these midterms?
It's really not the peace component that concerns me or concerns Republican leadership. The problem is that they made the argument to the American public that Trump would stop escalation of this. So if Trump was president, Putin would never have engaged in Ukraine. If Trump was president, then Hamas would never have invaded Israel. Now here we are, Trump is the president. And we are on the brink of full-scale war, if you wouldn't even call it that already, from dropping massive bombs on another nation in the Middle East. And the question is, was any of that true? And I think that's what's going to keep Republican leadership up at night, because that was what they sold to the American public. And now that we are in a position where there have been major bombs dropped and there is this very real risk of Iran becoming even more entrenched in its nuclear proliferation, as perhaps you were discussing, Matt, that's the real risk going forward. So it's a wholesale reassessment of what it is that they sold to the American public.
How seriously is the constitutionality of this being discussed? I saw Massey posted that this is not constitutional, and I guess it depends on your definition of war. Does it matter beyond, op-ed columns, Henrietta? Is there any chance that this becomes an issue for the president?
No, as a process argument, they'll have votes on it and that will go on your scorecard, and we'll think about that having repercussions 10, 20 years down the road as members run for office, famously thinking of Hillary Clinton and then Donald Trump himself saying, I would never have voted for that. These things have ripple effects down the line, but not immediately. There's nothing Congress can or will do to limit the president's authority on this. A vote in the Senate is being teed up. I understand Leader Schumer is going to file a war powers resolution to have a vote potentially before the reconciliation bill gets discussed. And then on the House side, Democrats are expecting something in the range of about 190 members to support, along with Massey and some very few Republicans.
Well, that's what I wanted to ask about before we let you go, Henrietta. The fact that you think about this tax bill, President Trump has the goal of passing it by July 4th. That is next Friday. Senate Republicans plan to begin voting on the bill midweek. Now that we do have this escalation and all these open questions, how does that factor into that voting process, if at all?
Right now, we're about 24 hours behind where we were on Friday. So Iran and the parliamentarian going through the process with Senate committees of jurisdiction, which sounds trite in comparison, but it's a very big deal, have all been delayed by about 24 hours. So today, The Senate Finance Committee is going to begin negotiating their package with the parliamentarian on the healthcare side. Tomorrow, they'll pivot to the tax portions. We're going to need to get a whole new score of this bill. They're going to have to rewrite substantial portions of it. Right now, they're down about $200 billion in revenue from where they were on Friday, based off of the bird bath, as we call it in the Senate. So the earliest I see the Senate voting on this package is slipped from Wednesday now to Thursday, realistically. So the timing is really tight to get this to the president. I have 40% odds that it could get to the president by the 4th of July. There's no shame in the game of waiting until July. But this is a very unpopular bill. It's got a 71% disapproval rating amongst independent voters. And to your point about the midterms, that's what's going to keep members up at night.
Oof. Well, Henrietta, it's fantastic to speak with you. Really appreciate your time on this Monday morning. That is Henrietta Treyz of Veda Partners. Meanwhile, let's get a check on these markets right now at the index level. You can see the S&P 500. It's not down. It's up slightly. We were lower by about 1% in the overnight session, coming back now about 20 minutes until the opening bell. Crude, a similar story to the other side. You had crude prices higher overnight over the past weekend, now coming in a little bit. And that bond rally really building some steam here. The 10-year Treasury yield now down about 3 basis points, Matt Miller.
Yeah, interesting look there, and we're going to continue to check across the assets, look at Brent crude as well as gold and some of the other things that people are trading a lot this morning. Some more movers on our radar in terms of the stock market. Energy stocks, you can see, are up across the board. Exxon, I showed you earlier, but there are Chevron and Occidental. Of course, they're not massive moves, and if you see something like the Strait of Hormuz closed, you can expect to see a giant spike in oil prices. JP Morgan says up to 70%, and obviously that would drive these stocks higher as well. U.S. airlines falling as international carriers reroute flights through the Middle East. That's to be expected, and, well, this is, the airlines, not big moves. The big one that you just saw.
Yeah, that was a deep
Kind of a spoiler, huh?
Let's go to it. Hims and Hers. This has nothing to do with the Middle East. This is some breaking news this morning that Novo Nordisk is terminating that recently formed pact that it has, that partnership with Hims and Hers. It had been planning basically to sell its compounded drugs, or rather its drugs, through the Hims and Hers platform there. But the Danish drug maker cited concerns about sales of compounded drugs and misleading marketing in a statement Monday. That is taking a big chunk out of Hims and Hers stock, as you can see. It's also not great news for Novo Nordisk because Novo Nordisk has been losing share to Eli Lilly in the States. This has been one of the ways that they were going to try and take back some of that share, but clearly a little bit of a setback this morning.
I think very interesting. We're all paying much closer attention now after the American College of Cardiologists said this has got to be a part of your regime if you want to stay alive for longer. Coming up, oil moves today are minimal but remain elevated since Israel's attack on Iran started 10 days ago. We'll game out possibilities for the energy supply chain next. This is Open Interest. Let's get to high interest. Let's look at what's making headlines around the world. Tesla has finally rolled out its driverless taxis, but only to a handful of riders in Austin, Texas. An employee sat in each car to monitor the safety. Tesla handpicked initial riders, which featured investors and social media influencers who live streamed their trips as if it was something amazing, even though they could have been doing the exact same thing in Waymo for years. Shares of Northern Trust are up in the pre-market. The Wall Street Journal reported that Bank of New York Mellon approached Northern Trust last week expressing interest in a possible merger. A tie-up would be significant. Northern Trust has a market cap of more than $21 billion, while BNY tops $65 billion. You can see BNY not moving in the pre-market, but Northern Trust up more than 6%. And airlines across the globe are adjusting flights as conflict escalates in the Middle East. British Airways and Singapore Airlines have canceled flights to the Persian Gulf following U.S. strikes on Iran. Japan Airlines and Air India are rerouting flights to avoid airspace above the Persian Gulf and the Gulf of Oman. Katie?
Well, let's talk about what this all means for oil, because crude prices have remained elevated since Israel's attacks on Iran began 10 days ago. Production hasn't been impacted in the Middle East, which controls 1/3 of the world's crude supply. Let's discuss this all with Bloomberg The Close anchor Alex Steele. She has covered commodities for years, our commodities queen, joining us on set right now. So you zoom out a bit and the move looks more dramatic than what you're seeing this morning, which is pretty much flat, which a lot of people are scratching their head about. You think about this escalation that took place over the last 2 days. Why aren't we seeing more of a reaction in the oil markets?
I'm glad you put it in context over the last few weeks, right? Because we have seen oil prices jump 5% since we first had the strike on Israel to Iran. Before that, just in the last few weeks alone, oil prices have jumped 15%. Why they're not moving more today is actually pretty a simple one, because we haven't seen any issues with supply output and with supply transport. Clearly, those are risks, right? As we know, Strait of Hormuz would be, DEFCON 12. Like, that would be the worst case scenario for oil. A couple other things, though, too. Supply is still very reticent or available. You also have Saudi Arabia trying to get more oil back into the market. China has been stockpiling oil, so they have a buffer. Iran has been exporting a lot before this happened to kind of get it out there at the same time. Higher oil, higher U.S. shale response in the U.S. And, how is demand growth? I don't know. Like, what do we know about global GDP? Will we really see that big uptick in demand growth? If you're going to see that kind of spike, you need both. You need the supply and the demand to kind of move together to get that really dramatic spike.
You mentioned the Strait of Hormuz we're showing here on the map. The issue, right, that Iran is so close and it gets so tight there.
Yep.
Iran itself only produces, what, 2 million barrels per day?
More than 3 now, but yeah.
But almost all of it goes to China, right? The Strait of Hormuz, on the other hand, is what, 1/5 of global oil needs? And so if that gets shut down, we're hearing people say that the price of oil could go up 70%, JP Morgan says. So I think Henrietta said sky high. What's the likelihood, or what's the last time we saw that?
We never did.
They've never shut it down.
They've never shut it down. They've threatened. There have been other things that have happened, attacks on specific infrastructure, maybe some mines in the area to prevent ships there. They have been cyber attacks on vessels recently to kind of mess up their navigation in the strait. There's other things that can be done.
They've harassed, basically.
Yeah, they can harass them, exactly. They can do some stuff on the Red Sea and hurt ships there, but they've never actually closed it. So this is all like a pretend scenario that has never actually happened. But, it's not just crude, it's oil products also. You're looking at like 20 million barrels of oil and products a day. You're right, a lot of that goes to China. But again, I mentioned that China has been stockpiling anyway. So would you see an immediate reaction? Because they can weed through those stockpiles at the end of the day.
All right, Alex, great context. Really great to unpack this with you. That is Alex Steele. She is co-anchor of The Close, joining us on Open Interest. And coming up, Lazard's chief market strategist talks about the muted equity reaction to the U.S. involvement in the Middle East. That conversation up next. This is Open Interest. Welcome back to Open Interest. Morgan Stanley's weekly strategy note focuses on the modest stock reaction to geopolitical events such as the U.S. bombing in Iran. The strategists believe that geopolitically led sell-offs are typically short-lived and modest, and that oil prices will determine whether the volatility persists. A team led by Mike Wilson says that oil would need to hit $120 per barrel to really pose a threat to the business cycle. Let's keep the conversation going now with Lazard chief market strategist Ron Temple joining us at the desk. Great to see you, Ron.
Great to be here. Thank you.
I want to start with that point. Is it really all about oil when trying to calibrate how the equity market might react to these events?
I think on a direct basis, it really does come down to energy prices. And just to kind of put a broad kind of guideline on this, Jay Powell testified in Congress a few years ago, right around the time of the Russian invasion of Ukraine, that a $10 increase in oil prices, if sustained, would translate to about a 20 basis point increase in inflation, a 10 basis point decrease in GDP. So the way I'm thinking about this, go back to May 5th. That's when West Texas Intermediate and Brent basically bottomed, WTI at 57, Brent at 60. You basically had an increase of about $15 a barrel since then. If that's sustained, it has a marginal effect on the economy, but not a big one. So kind of to Mike Wilson's comment about $120, that would have a sizable impact. But maybe to put this in context, going from 60 to 120, if those kind of rule of thumb that Powell gave works, is 120 basis points of inflation, about the same as the impact of the tariff increase since January.
So that's funny. And we all are also awaiting the sort of deadline for reciprocal tariffs. Are markets not thinking about that while we deal with this? Does that go on the back burner?
I think the market assumption on July 9th is that we're going to punt for another 90 days. And basically, we've had so little progress in terms of negotiated agreements. I think many people thought an agreement with Japan would have been announced at G7, that India was making quick progress, which always kind of surprised me because it's one of the most tariff-ridden countries in the world. But bottom line is we've made so little progress that I think the administration will kick the can down the road on that. So the markets are probably right not to be too worried about July 9th. I think on the energy front, though, it's interesting. Back to Iran, this story is far from over. I think there's a lot more to go here. Number one, we don't know how successful the attack was in basically debilitating Iran's nuclear program. We'll have to wait to see. Number two, though, is we have to wait to see what Iran's response is going to be. It's highly likely there will be some response. And there's kind of a continuum of attacks on U.S. military assets in the region, which don't affect energy production, probably don't affect markets very much. Maybe you get a little risk premium where Brent's at 80 to 90. If they start attacking other Gulf energy infrastructure, you could see oil prices up to 90 to 100 on Brent. And then there's the Strait of Hormuz scenario that you just discussed before. And so it seems like the least likely. It's very hard to do. But I do worry if the historical parallels might not be as instructive as people think, because look at what the Houthis have done in the last year. They've actually been able to completely cause rerouting of shipping. And unlike in the case of the Red Sea, there's no alternative path other than the Strait of Hormuz. So this could be a different risk premium situation.
Yeah, I was on my phone in the Uber this morning looking at maps, and it's a fair point there when it comes to the actual geography of the area. Ron, we are just getting started. You're sticking with us through the opening bell. We'll walk you through all the opening action coming up next. This is Open Interest.
Moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. So the first time that U.S. investors in U.S. markets get to show essentially what they think of the U.S. bombing Iran through the stock market lens. Futures right now are pretty much unchanged. We've been up and down throughout the morning, but you can see arrows are green. So that shows a level of calm that you may not have expected on Saturday night. Ring the opening bell down at the NYSE is Amrise, which is a company that is spun off from the German cement maker Holcim. Down on the NASDAQ, look at that, Matt Siegel there, former Bloomberg producer. Now he runs the Node ETF, actively managed digital assets, and they are celebrating their, Web3 digital assets campaign there at Van Eck. So that guy used to be my producer.
There you go. It's a small world out there. Let's take a look at the cross-asset moves, though, after that escalation that we saw this weekend. You can see the S&P 500, it was much lower pre-market, down about 1% overnight. Then it was higher. Now it's pretty much unchanged as the bell rings. You can see we're hanging out below 6,000. We'll watch how that trade develops. And a lot of that depends on oil. What happens with oil prices? That is what we've been hearing all morning. You can see not much is happening right now with crude prices up just about 0.3%. Of course, we know that traders across markets right now are awaiting the response from Iran. This is one of the markets you want to keep an eye on. So too is the bond market. The 10-year Treasury yield a little bit lower right now. Perhaps some of that haven bid coming in, pushing the 10-year yield down about 3 basis points. But again, the message, Matt, is muted moves overall.
Yeah, absolutely. I'm watching oil, defense, airlines. You could see the moves that you would expect, just not in the size that maybe you would have guessed on Saturday night. ExxonMobil is up, but just 1%. Lockheed Martin gaining just about 0.5%. United Airlines down 2%. That's a bigger move as we get into the cash trade. But we are back with Lazard, Chief Market Strategist Ron Temple. And Ron, what you were saying before the break is we still don't know Iran's response and pretty much everything in terms of the equity market, treasuries, oil. I mean, all the assets that you cover, those moves depend on Iran's response. So until we get that, it's anyone's guess.
No, I think it's going to be days, potentially weeks, before we know how the Iranian regime responds. I mean, clearly they've been taken offside in many ways. I mean, it's been surprising how effective the Israeli attacks have been, it's frankly incredible how good the Israeli intelligence was in terms of knowing where to strike and having people internally. So I think for Iran, there's probably a destabilization of just trying to get their footing again, but it seems highly likely you're going to get a response. Very unlikely that, as you've read, the former Ayatollah Khomeini basically talked about drinking from the poison chalice and agreeing to peace with Iraq many years ago. Hard to believe that Khomeini is going to do the same thing without some response to restore some domestic credibility. So we'll definitely be waiting for that. But again, if it's one-off and we have a temporary spike in energy, the impact on the real economy is just not that big. So, what we would need to see for this to affect markets in a durable way is an ongoing skirmish or, periodic attacks that lead markets to not be confident in energy supplies.
Well, when it comes to a response, we do have some news coming out of Reuters saying that the U.S. sees a risk of Iran retaliation within 2 days. This is attributed to U.S. officials who were not identified, but reportedly one of the officials told Reuters that Iranian retaliation could come in the next day or two. So again, that is the big question. I want to talk a little bit about how you approach the energy markets, though. I mean, outside of actual oil and that market, when it comes to energy equities, we have seen a rally there mirroring what we're seeing in the underlying market. Is that something to chase, or is that also a situation where you just need more information?
I think it's where you need more information. I think trying to chase any of these short-term news flow items is really risky. And, historically, investors have been paid to look through geopolitics, but I think maybe that's the wrong lesson. What we want to do is think about the long-term change in geopolitics. And I guess if I think beyond the immediate kind of day-to-day reactions, is Iranian response, for example, what I worry about is I think this probably increases the Iranian desire to develop nuclear weapons, to have a real deterrent. You might recall, by the way, back in 1981, Israel attacked an Iraqi nuclear plant, the Osirak plant. And basically what we found when the U.S. invaded Iraq many years later is they had gone underground and continued to develop nuclear weapons or nuclear power, but had done it more rapidly, put more capital into it. I wouldn't be surprised if Iran does that. I wouldn't be surprised if they kick out the IAEA inspectors, leave the non-proliferation treaty. So long term, I worry about what the proliferation means, but short term, I think it's a risky move to try to chase stocks positively or negatively.
Ron, I imagine that the dollar must be the foundation of your analysis in many ways. And we have seen a spike in the Bloomberg Dollar Index. However, if you look at it over the course of, here's a 5-year chart, you can see we're still down 7 to 10% from those two peaks. What do you expect from the rest of the world in terms of preference for world reserve currency? I mean, is the dollar still up there among the top 1 world reserve currencies? There is no single alternative to replace the dollar, but I do think over the years ahead, the dollar is going to be less and less preferred by foreign investors. We've seen it this year. The response to tariffs was totally counterintuitive. Textbook finance, economics would have said the dollar should have strengthened with higher tariffs, leading to higher inflation and higher interest rate expectations in the U.S. The opposite occurred because I think we saw a lot of people starting to reevaluate how much exposure they want to U.S. assets in total and U.S. dollars. So I'm more on the dollar bear side on a structural basis. And I can tell you from my discussions with major asset owners around the world, the conversation is generally how much do I want to decrease my dollar exposure, not should I decrease my dollar exposure.
Well, from where I'm sitting, it seems like the exacerbation of a lot of trends that we had already been witnessing over the past few years. You think about central banks, they had been de-dollarizing their reserves in certain regions of the world. You think about foreign ownership of treasuries, that's been coming down. So it feels like maybe we're seeing a little bit of an accelerant of what was already starting to happen.
Yeah, and no one's ringing the alarm bells, by the way. I just want to be clear. These are not emotional, political decisions. Maybe in some cases there might be some foreign governments that decide, what if we just don't buy any more treasuries and let them keep maturing? We've seen China's holdings of U.S. treasuries go down by $600 billion in the last decade. I don't think that was a purposeful, let's go sell and crush the treasury market, but maybe let's reinvest the proceeds from maturities somewhere else. But generally, the discussion is more about just what's the risk reward. And people look at the U.S. and see a debt to GDP ratio above 100% that's going to keep growing given the fiscal package we're about to pass. They look at questions around predictability of policy, polarization in the politics, questions about rule of law, and they start to really wonder, is the foundation that made the dollar the reserve currency since World War II the same as it used to be? And secondarily, are there other alternatives? Maybe with what's happening in Europe this year, the euro starts to look a little more credible. So this is all about direction of travel, not just where we stand today.
I want to point out that President Trump has put out a statement. I imagine, is it Truth Social, guys? I think it's Truth Social, likely, or it doesn't really matter where.
That's Truth Social.
He's telling everyone, in all caps, keep oil prices down. I'm watching. The picture's so ominous, by the way. You're playing right into the hands of the enemy. Don't do it. It seems like a sentiment he could have taken into account before sending 14 bunker busters to Iran. I mean, that's the sure way to drive oil prices higher, right?
Well, so far it hasn't happened, but I'm going to refrain from opining. I think politicians have long stated their preferences for energy prices, and they've long tried to, twist the arms of people in the Persian Gulf and OPEC to produce more on different occasions. But I do think there is a risk here that we see energy prices go up. It all depends on what Iran does. But again, my gut is any response is going to be more short-term in nature because the long-term structural supply-demand story hasn't really changed. Most forecasters are saying we're going to have excess supplies of oil over the next 6 to 12 months. Prices are going to be on a downward path. What could change that? Prolonged geopolitical conflict in the Middle East.
All right, Ron, got to leave it there. Great to start off the trading week with you. That is Ron Temple. He is Lazard's chief market strategist. And let's get a check on this market right now. We're just about 10 minutes into the U.S. trading day on this Monday following a very eventful weekend. You do have the S&P 500 marginally higher right now to the tune of about 0.1%. You do have 300 names in the green. You wouldn't necessarily know that by looking at these small moves overall. I do want to call out some names here. Up at the top, you do have Tesla as your biggest gainer in the S&P 500 right now. They had that robo-taxi launch over the weekend. It went relatively smoothly, and you can see that shareholders rewarding that. Eli Lilly higher by about 3.6%. We got news that Novo is terminating its partnership with Hims & Hers. That should spell good news for Eli Lilly. That is certainly the sentiment making its way through the stock right now. And then ExxonMobil higher as we monitor what's going on in the Middle East. On the downward side, you have Nvidia, Microsoft, Amazon trading places here for who is the biggest loser on a points basis. Small moves when you take a look at the percent, but still, when you're talking about the world's biggest companies, it adds up. And this is what you're going to see when we take a look at the sectors as well. You do have more green than red, but at the bottom, you can see we have tech, we have communication services. At the top, utilities, energy, real estate, consumer staples. A really interesting makeup on this Monday, Matt Miller.
Yeah, definitely a fascinating reaction, and maybe not exactly what you would have expected. So fascinating, I think, to see crude down right now. Whether you're looking at WTI or Brent crude, we are seeing red arrows there. But could we see in the near to midterm $130 a barrel? We'll look at what could happen if Iran chokes supply by closing the Strait of Hormuz next. This is Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Deutsche Bank upgrading Estée Lauder to buy, highlighting the company's strengthening fundamentals and mounting growth prospects. That is being rewarded by about 3% higher on this Monday. Next up, Mideast upgrading AMD to a buy as well, expecting shares to benefit from numerous catalysts in the pipeline. A bit of a rally this morning as well for AMD. And we end with BMO downgrading Dow to underperform, saying that the company's dividend is at risk due to weakening earnings. Certainly not what you would want to see. Shares down almost 2%, Matt Miller.
All right, let's turn our attention now back to the crisis in the Middle East. Oil is pairing earlier gains as traders await Iran's response to the U.S. The president posting moments ago that everyone needs to keep oil prices down and avoid playing into the hands of the enemy. He says, I'm watching. Don't do it. Joining us now, Bloomberg oil strategist Julian Lee and Dina Esfandiari, Middle East lead for Bloomberg Economics. Welcome to both of you. Dina, why don't I start with you? You laid out 3 scenarios for the potential response from Iran. The worst one being, of course, closing the Straits of Hormuz, and you say that could push oil up to $130 a barrel. Is there any way, is there any likelihood that that happens in the near term?
For us, it's the least likely scenario for now. Iran has indicated that it wants to avoid escalation. It seems to be downplaying the damage done to its nuclear facilities by President Trump's strikes over the weekend. So all indicators seem to be pointing towards some kind of retaliation, because Iran can't not retaliate, but it does seem to be as though it's going to calibrate it very carefully so that we don't find ourselves in a situation where oil prices skyrocket.
Well, Julian, let's talk about some levels here, because you've seen a bunch thrown around from 110 to maybe the 130 area. If you did see that strait get closed, which Alex Steele reminded us has never happened before, what seems to be consensus, and both where it comes to when it comes to Brent prices, but also the likelihood of such a scenario actually playing out?
Well, I agree that this is a relatively unlikely scenario. Iran has made threats, but it's made threats before, and I think it has been very careful in trying to calibrate a response, just as it did back in October. And I think that if we do get a price spike, and I'm not in the position to speculate how high that might go, but what I can say is I think it would be short-lived, because I think that the moment you get threats to shipping in the Strait of Hormuz, you get a very swift and very sharp military response from the US. They've got 2, or will soon have 2 carrier groups in the region. And I think that there will be a very swift response. I think you will see the release of strategic stockpiles, if necessary, in consuming countries. And I think that will help to bring the price back down fairly quickly. But I agree that this is probably the least likely scenario in terms of what actually happens in and around Hormuz.
And Dina, we've been marveling at the fact that you're not seeing too much movement when it comes to Brent this morning. There was an interesting quote from Bob McNally overnight speaking on Bloomberg television. He, of course, is a former White House energy official. He said that we are up $10 a barrel since the war started, now a little more. And so I think there is an appropriate amount of risk in the market. I would love to hear your thoughts on that, whether $10 is an appropriate risk premium to build in.
It does appear, though, since this entire conflict has started, that oil has been relatively stable. So I would argue that, yes, that risk seems to be priced in. Obviously, all bets are off if things like the Straits of Hormuz are closed for a while, especially if that lasts. I do agree that it's likely to be short-lived because the U.S. would step in and ensure that they are reopened. But Iran is able to pose a threat. It's able to slow down shipping. It's able to harass ships. And that might mean that we find ourselves in the type of scenario that we found ourselves with the Houthis in the Red Sea, where it just becomes too problematic for shipping to go through those routes.
Dina, you have a lot of experience analyzing this region, and I wonder what your take is on whether or not we've crossed the Rubicon with this attack, U.S. attack on Iran. I was talking with Peter Cheer earlier from Academy Securities, and he thinks it's highly likely that the U.S. Now has no choice but to be drawn into a protracted conflict, to continue military involvement, as Iran is so likely to pull out of the Nuclear Non-Proliferation Treaty. What's your view?
Well, certainly this attack doesn't enable the U.S. to just say, I'm done with the Middle East, let me turn to Asia. It does, in fact, the exact opposite. The one thing that I will say, though, is that Iran is not keen to escalate this very far because it knows that facing off with the U.S. is not something that it can win. And past instances have shown that actually it's been very careful at calibrating its response so that there isn't a huge escalation with the U.S. And it will ensure that it does exactly the same thing this time around. It just has to do something. It can't stay back and not do anything. So it will do something, but I suspect that it will calibrate it so that things don't get out of hand. But for sure, the U.S. is now very much involved in the Middle East, and I don't foresee a situation where it puts its hands up and turns away from it anytime soon.
All right, Julian, thanks so much for joining us. Bloomberg's Julian Lee covering the oil markets for us. Dina Esfandiari of Bloomberg Economics. You can see more from her by typing BECO GO on your Bloomberg terminal. Coming up in the next hour, we'll discuss Iran's nuclear timeline and options with former White House Middle East policy advisor Hagar Chemali. This is Bloomberg. This is Bloomberg Open Interest. Quick check on what's going on in stocks. We're 23 minutes into the session and looking at gains on the S&P 500. Pretty solid gains here, 0.3% on the S&P as well as the NASDAQ. If you're like me, you're going to look straight for the oil chiclet. It's right here. At least this is NYMEX crude, 73.72. Coming down, and we see the same if you look at the global benchmark, Brent crude. In terms of the big stocks that swing the indexes, Nvidia right now is down, but only marginally. Tesla up 5.5% after successfully launching like a dozen robo-taxis in Austin. Occidental Petroleum is a gainer as you would expect, but not by too much, 0.2%. Lockheed Martin up, but only 1% there. Novo Nordisk coming down, as well as Hims and Hers, after the two canceled the collaboration that they only, I think it was 2 weeks ago, Katie announced. Is that right? Was it 2 weeks ago?
It was slightly longer than that. It was late April, but time is a flat circle, and it certainly feels like it was much more recent than that. Remember, in late April, you had Hims and Health absolutely soar after Novo said it would sell several of its popular weight loss drugs on the telehealth platform for a steeply reduced price. I want to talk about the fact, which we were just talking about a few minutes ago, that you have shares of both companies lower right now. Hims and Hers, it's an obvious story there. Novo Nordisk has been fighting to get back its market share in the U.S. It has been losing out to Eli Lilly. Of course, Eli Lilly is a U.S.-based company that it competes directly with. So you can see Novo taking a dive here because now it has to come up with another plan. And if you show up Eli Lilly, you can see that shares are up pretty healthily this morning on the heels of this news.
You know, I saw Madison Mueller, who covers this sector and these drugs for us on the BN side, wrote a story that went out on Saturday morning showing that Eli Lilly's experimental obesity pill, not a shot, a pill, held up to scrutiny in trials. And this is so important for those of us who are hungry for such a treatment but don't want to inject ourselves.
I know you've been holding out for that pill. Some more good news for Eli Lilly here. We should mention that, remember, the news broke that Novo was, its CEO was stepping down. Lars Frogard Jorgensen. I believe this partnership with Hims and Hers.
Is more what it felt like.
Pushed out is a more blunt way to put it, but I believe he was the architect of this partnership, so clearly some changes underway in direction. And also interesting to get this news on the heels of what we learned last week from the American College of Cardiology, saying that millions more Americans should be taking GLP-1s to help prevent heart disease. It's almost, or if not more important than diet, than exercise. That is a sea change.
Yeah, absolutely fascinating to me that Lars Frogard Jorgensen was pushed out after having, what, tripled the stock price under his tenure, quadrupled the stock price in his tenure.
Wasn't enough.
Yeah, it remains to be seen if they can turn that around, and to what extent insurance is going to be covering these treatments that the ACC recommends. Coming up in the next hour, Goldman's managing director Christian Mueller-Glissman joins us, as well as Elliot Ackerman and Hagar Chemali. We are 30 minutes in the trading day, and I'm not going to say muted reaction because actually stocks are up after the U.S. invaded Iran over the weekend, or attacked Iran, I think is a better way to put that, with B-2 bombers 10-year yield down, so that's a reversal of what we saw earlier this morning, but crude, importantly, down as well. So a pretty amazing reaction and kind of the opposite, Chemali, of what you would have expected.
Yeah, it certainly is, but it is still pretty defensive. It's energies that are up today, utilities that are up, real estate is up because you have that safe haven bid into the bond market. We'll be watching all of it for you. We're going to keep an eye on those markets. As Matt was saying, they remain calm in the face of rising geopolitical uncertainty.
Yeah, energy obviously in focus as the world awaits Iran's response to these attacks.
And President Trump is threatening additional strikes unless Iran makes peace.
Iran, the bully of the Middle East, must now make peace. If they do not, future attacks will be far greater and a lot easier.
And we'll keep an eye on all the headlines. Of course, Matt, just really quickly, we were saying we were keeping an eye on all the smaller economic data. Existing home sales actually rising. A very calm day in the markets despite all of the fears. We're going to talk about what is going on in the latest from the White House. We're going to now bring in our White House correspondent.
Well, I think first let's break these headlines because I'm watching the S&P. Mickey Bowman has a speech and well, 10 o'clock was the embargo, and it's currently 10:01:17. So I think it's fair to say that she is calling for rate cuts, and she's the second Fed member to do it in the last week. As we heard, I think it was actually on Friday that you had Chris Waller on CNBC saying also that he thinks rate cuts should start in July, and that's what we're hearing from Bowman. As a result, you see the S&P moving higher right now, gaining about 0.5%. We may talk with Mike McKee about this in a moment. He's the one who gave us the heads up to this Mickey Bowman speech. He's also talking about bank regulation. But I think the important takeaway is this is a second Fed member saying that a rate cut could come as early as July. And as a result, you see a jump in stocks and a drop in yields.
Yeah, check out the 2-year now at 385. We've had the safe haven bid, but now also, as you're saying, Fed official, very important one to be watching as it pertains to bank regulation, also calling for that second rate cut. The market is not pricing that in, a little more than before, but certainly 2 rate cuts by the end of the year. We're going to discuss more of that, but first we're going to get the latest from Washington. As we've been saying, we're going to bring in Washington correspondent Tyler Kendall to talk exactly about the latest response. We heard the president really on Truth Social less than a half an hour ago calling for the Department of Energy to look to lower energy prices in the U.S., to drill, baby, drill. You have the president, of course, also keeping a close eye on the Strait of Hormuz. What is to be expected?
Yeah, hey, Chemali. Well, our analysts at Bloomberg Intelligence tell us that Iran's response will likely be tempered here. But if they were to escalate this, of course, the Strait of Hormuz could be one of those pressure points that they could inflict. However, U.S. officials, including Secretary of State Marco Rubio, has pointed out that this would be to likely Iran's economic detriment, since it would block off their own oil from reaching export markets. But it is clear that it is top of mind for this White House. As you mentioned, President Trump, 2 posts in the last hour, one threatening that he doesn't want to see oil prices go up and also saying drill, baby, drill. I will say I had the chance to quickly catch up with the NEC director, Kevin Hassett, here at the White House. He told me that he's closely watching oil markets, but at the moment he's not concerned about any disruption. But retaliation really is top of mind for U.S. officials and what that could potentially look like. We should say, Matt and Chemali, that the White House says that they have been proactive about protecting U.S. forces in the region, but we have to keep in mind that there are currently more than 40,000 troops stationed in the Middle East theater, which of course only raises the stakes of this that much higher.
Tyler, we appreciate it. We'll get any updates as we get them. Of course, the world, as you could say, is waiting to see what the response from Iran will really be. Joining us now to talk about the implications for markets, Christian Mueller-Glissman, Goldman Sachs' head of asset allocation research and portfolio strategy. Matt and I were just talking about the impacts across asset classes. I think a little lesser talked about here is, yes, oil prices have not been rallying out of control this morning, but just about a month ago, we were less than $60 a barrel. With elevated oil prices at this level, what does it mean for inflation?
Yeah, I mean, listen, I think we are all worried about stagflation in the second half because of tariffs. So if you now push up oil prices, it adds to the stagflationary fears. It weighs on growth. It pushes up inflation. At the margin, that is bad. I think the problem, however, is that we don't really know where the oil price will land. I think we're talking about spike potential. and we don't really talk about a long-run impact, at least as of now, because there's so much supply of oil. Like our team has been writing a lot about that. I think the trend for oil into next year is generally down. So you have to square the two against each other, because the markets normally don't like things that you can extrapolate, things that stick, that can get worse. Whereas with the oil price, most people fear that there's a temporary spike potential, but then you normalize.
And we saw something really similar in 2019 when Iran, maybe through the Houthis, attacked the Abqaiq processing terminal, which I think is the biggest in the world, right, in Saudi Arabia. They put out 7% of global oil. We did see a 20% spike, but it didn't stick and had no effect on inflation in the U.S. economy. So at what level do you worry about the oil price, or for how long does it have to stay there?
Yeah, listen, everybody's worried about the disruption in the Strait of Hormuz. Like, if you do actually get a proper halting of the ships and the flows from there, I think you can easily get kind of Brent above 100. And I'm not sure if that's a psychological level, but certainly in my mind, if oil prices go above 100, historically, if you just backtest the correlation of risky assets and risk sentiment, if you have such a sharp increase and you break the 100, I think markets would certainly suffer a bit more. But I think generally the way I think about it is like you have this once bitten, twice shy problem with politics and geopolitics, where investors are very reluctant to make large portfolio shifts in function of politics and geopolitics. And that's not a bad policy, considering they can have so many twists and turns, and there's a certain hurdle rate. And I think 100 would certainly get people more worried. And anything you can extrapolate, if there's an element to the tensions that can linger, that sticks, that would certainly be worrisome.
I just wanted to point out, I was looking at a chart in a story earlier that shows, between 2010 and 2014, we actually did have oil between 100 and 120, but not breaking the top of that, really. And the whole time, stocks were marching higher and higher and higher. We do have the chart. 2172 is the number if you want to pull it up in the #BTV library. So that's a psychological number, but it seems like 120 is a level that it needs to hit before people really start to freak out in stocks.
Well, I mean, that psychological level changes over time, of course, in function of the trend. But don't forget, at the time, as you were saying, the reason why oil prices went up was often because of good reasons, growth. No? So we are now talking about oil prices coming from relatively lower levels and potentially going to 100 for bad reasons. And I think the source of the shock matters a lot. There's nothing good here. I think it's geopolitics and it's a lot of disruption.
It's interesting. The Bloomberg economics projection is if things were to go very south, if things were to be at its worst, oil prices could go to 130, which would imply inflation going to 4%, according to their estimates.
Have you played with, by the way, SHOK on the Bloomberg terminal?
No.
SHOK on the Bloomberg terminal. And you can plug in like a higher oil price and see
what it would mean.
how it would model out.
That. Why didn't I just look over to you this morning? You know, break-evens were what I was looking at, because where is the market reflecting inflation expectations? They're only at about, for the one-year break-even, at about 2.7%. So lower than the highs. We've seen as high as 3% in the last month alone, but drifting higher.
Yeah.
To your point you were making earlier, and to go back to what, of course, Fed official Mickey Bowman was saying, how are they supposed to cut rates in July or as early as July if inflation expectations are rising?
No, I think the key question is, will it stay at 130? If it stays at 130, you get that lingering effect, you get the base effects kick in, you get all the spillovers to other categories in the inflation basket. And then I think you have to be careful. Just to be clear, the Fed generally tries to look through. They look at core inflation. They try to look through energy-related swings in inflation. But if it spills over, especially at a time where the tariff impacts are already pushing up inflation, it's a problem. And I always have the 3x3 rule. If for 3 months in a row inflation goes above 3%, that is usually a problem for equities to deal with. So we might see that.
I want to ask about the dollar because it's recently spiked higher. If you look at the Bloomberg Dollar Index, but we're still off 10% from the highs we've seen over the past few years. Now, if you zoom out, viewers have been writing in saying, if you zoom out 20 years, the dollar is still pretty strong. What do you think about the dollar as #1 choice for world reserve currency? I mean, or how much has it declined in terms of, your percentage weighting?
Yeah, I mean, the way to think about it, I think world reserve currency of the dollar, I think, is not really in question. The way I think about it is you have the business cycle and the structural cycle and the sentiment cycle. And I think what we're dealing with the dollar is a structural cycle shift, the way people perceive U.S. assets in their portfolio in the dollar. And there's just a huge overweight in the benchmarks. And people now have more data points that show that the dollar is not a one-way street in terms of risk-adjusted returns and in terms of correlation to the rest of the portfolio. So everybody is reassessing how much dollar they want to own and how much dollar they currently own. And I think that's a structural reassessment that won't go away unless the dollar resumes its uptrend, probably for a few months, because you have that data now, like the last few weeks and months, where the dollar behaved like that enters portfolios, that enters minds. But to your point, the business cycle currently, very traditional, oil price shock, I think is risk off, is geopolitics, and the dollar gets a bit of a safe haven bid. And the US obviously has no more oil trade deficit like it used to. So as a result of that, the dollar actually can be a bit like a safe haven compared to some other currencies globally that might be more exposed to energy. Think about natural gas disruptions for Europe. Think about like oil prices globally, who imports oil. So from that perspective, the US is a bit more immune.
All right, Christian, great to get you in here. Really appreciate your time. Christian Mueller-Glissman there of Goldman Sachs talking us through the cross-asset reaction, really, to the U.S. attack on Iran. Let's get a check on what's going on in markets. And, Sonali, maybe not what you would have expected Saturday night, Sunday morning.
Not at all. The oil was above $81 last night. Now you have New York crude at 73, and you have Brent on the decline as well.
I would focus on Brent. Let me just say that we should be focusing on Brent. That's CO1 commodity, and then whatever you want to check it out.
It's the world index versus the U.S. index, but we should say that the U.S. index is also moving too, because the drill baby drill comment. Just less than an hour ago, you had President Trump saying that the Department of Energy should be encouraging more drilling. At the top of the hour too, we should point out that you had the Fed's Mickey Bowman coming in and saying that the Fed should cut rates as early as July. And take a look at that bond market. You had that haven bid already. You now have the 10-year down by almost 6 basis points, Matt.
Yeah, I think fascinating comments from Mickey Bowman. The next meeting is July 30th. So it's the end of July. We're still a ways away, but that's the second Fed voter to say that we need a cut basically now. And so it's interesting to see if the market starts to price it in.
Can I just quickly blow your mind a little bit? Because in the last 10 minutes, this trade has changed so much. I want to pull up the sectors here for you, Matt, because we said at the top of the hour it was a defensive trade. No longer. You actually have energy negative right now because of the change.
Consumer discretionary right up there on top.
Exactly. And I think it shows you what the president is trying to achieve here. Keeping oil prices low because it matters to the consumer, and that matters to the stock market, and that is now what's driving the trade, at least for right now.
That is pretty amazing. Dig down deeper into that, and you see that consumer discretionary, Tesla helps quite a bit, right? Up almost 7%.
Talk about it more in the hour. But coming up next, the world awaits Iran's response to the weekend's bombing. Former Marine and author Elliot Ackerman gives us his insight next. This is Bloomberg Open Interest.
Let's get now to high interest. Look at what's making headlines around the world. Fed Vice Chair Michelle Bowman said she could support lowering interest rates as soon as the July meeting. She cites contained inflation pressures and the need to support the labor market. She's currently speaking at a conference in Prague that you're watching there live, and we'll bring you any headlines as they come. President Trump's One Big Beautiful Bill, 1B3, is nearing a crucial vote in the Senate this week. The $4.2 trillion tax cut package doesn't have the support it needs to pass the Senate yet. Fiscal hawks seeking to lower the bill's price tag are at odds with Republicans worried about cuts to Medicaid and phasing out green energy incentives, which a lot of those states rely on. Israel ratchets up attacks on Iran. It launched fresh attacks on Iran's Fordo nuclear site on today, Monday. According to Israel's military, it also struck other targets that included airports and internal security headquarters run by the Islamic Revolutionary Guard Corps. And President Trump taking to Truth Social after the U.S. strike on Iran's nuclear facility, saying, quote, "It's not politically correct to use the term regime change, but if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change? MEGA," he says, which is make Iran great again. Former White House fellow and Marine Elliot Ackerman joins us now to talk about this. Elliot, you have a lot of experience in this part of the world, and I want to just ask, first off, about the likelihood that we are stuck now in a quagmire, the likes of which the Trump administration had wanted to avoid campaigning for this presidency. I mean, are we in a long, drawn-out conflict now?
I mean, the fact of the matter is we don't know. And that will be dependent on what the Iranian response is. The position the United States finds itself in now is that we are waiting for what the Iranians will do, and whether or not this most recent set of strikes begun by the Trump administration are successful will be dependent upon how effective and widespread that Iranian response is. So, we're kind of in a wait and see mode.
How do you weigh the likelihood of outcomes from Iran, especially with so many eyes on the Strait of Hormuz, with so much oil, fifth of the world's oil supply going through the strait? What is the likelihood that this becomes a key part of the negotiations from here on out? And that there could be some severe closures that it would face?
I mean, listen, that's certainly a potential. And I think what we're going to see from the Iranians in their response is a window into what their capabilities are. Those capabilities have been significantly degraded since the October 7th attacks. Their proxies like Hezbollah and Hamas have been significantly degraded. So the question really is, what is Iran capable of in terms of its response? And again, we are a little bit in wait and see mode.
I wonder, Elliot, about the likelihood that they have the ability to develop a nuclear weapon still, because we've heard reports that their uranium has been moved out of Fordo before the attack. I also don't understand why we all trust that they would allow, international agencies to keep a real eye on what they're doing. I mean, is it not unlikely that the Iranians have been secretly enriching uranium, that the Iranians have gotten any nuclear capabilities from allies like Russia? How concerned are you there? Because if they back out of the non-proliferation treaty, it would seem that we have to keep an eye on them no matter what they do.
Yeah, I think that's absolutely worth concern. And I think anybody saying they know exactly what's going on with the Iranian nuclear program right now is probably delusional. I think there are massive uncertainties in the status of that program. I think the only real certainty we have is that the Iranian regime wants to have a nuclear weapon and certainly wants to have one now. And the only way to get to a place, as President Trump noted in his Truth, that is to have a new Iranian regime. So I think anyone who tells you this isn't about regime change isn't being honest, because the only way to have a non-nuclear Iran at this point, or at least an Iran that's not actively doing everything in its power to get a nuclear weapon, is to have a different regime. And that begs the question of, does the United States with its allies want to be in the regime change business again?
What other regime possibilities are there? Because it didn't seem like there's a massive opposition in Iran.
There's been pretty strong. I mean, you've had colored revolutions there. The Ayatollahs are not hugely popular in Iran. So the idea that the Iranian regime could topple, is a very real potentiality. But the question then becomes, what replaces it? And if we look in the region, from Libya to Iraq to Afghanistan, what replaces it is often not that much of an improvement over what has come before. So, with any of these issues geopolitically, I'm an Iraq War veteran. I'm a little skeptical of going back to the Iraq War, but I think it's worth it in this case. Oftentimes the initial act, and in 2003 was getting rid of Saddam Hussein, is a worthy cause. Like, Saddam Hussein was a bully, a monster. He destabilized the region. It was a great thing that we got rid of Saddam Hussein. The problem was the cost on the back end. Which was, an insurgency, hundreds of thousands of Iraqis dead, thousands of Americans dead. And what we just did with Iran is worth doing. It's worth getting rid of the Iranian nuclear program. The question then becomes, what will be the cost? And we don't have that answer yet.
Elliot, we have to leave it there. We wish we had more time with you. That is Elliot Ackerman. He is the co-author of the book 2054, written with Admiral James Stavridis. Now, still ahead, we're going to discuss Iran's nuclear timeline and options with Hagar Chemali, who is the former National Security Council director at the White House. Stick with us. This is Bloomberg Open Interest.
Let's get a check on the sectors, on the market here with the move screen. I think it's the most dynamic way to look at the S&P 500 or any index. And you'll see that we have 413 stocks up, only 89 down. The direction of travel, at least in the past hour, has just been up and to the right. It's interesting to see that in terms of points, Tesla is the biggest addition here. This after they started robo-taxis with just a handful of cars, and they still had employees in every vehicle. But I guess influencers help, right? The stock is up 9%. Facebook is the second biggest gainer in terms of point additions. It's only up 0.75%. Microsoft, the biggest loser here, down about 0.2, but taking the most points, which is not even 1 full point. And that's why you see the S&P putting up some real gains. Sonali.
Yeah, we are looking at a very interesting market where some of the safe havens still have a bid in them, like the bond market, where, of course, you do have the Fed's Michelle Bowman now calling for a rate cut as early as July. So a lot of things going on. Oil now finding some retrieval, but still elevated relative to where we were a month ago. Coming up, we're going to speak more about the situation in the Middle East. Stick with us. We'll give you all the context you need. This is Open Interest.
Congratulations, President Trump. Your bold decision to target Iran's nuclear facilities with the awesome and righteous might of the United States will change history.
The world must not forget that it was the United States which, in the midst of a process to forge a diplomatic outcome, betrayed diplomacy.
It has exacerbated tensions in the Middle East.
The bombing of Iranian nuclear facilities by the United States marks a perilous turn in a region that is already reeling.
It is important that we now de-escalate the situation, stabilize the region, and get the parties back around the table to negotiate.
Through their actions, the U.S. has opened a Pandora's box.
The nuclear non-proliferation regime that has underpinned international security for more than half a century is on the line.
World leaders there reacting to the U.S. decision to bomb Iran's 3 main nuclear sites over the weekend. For more on what's next, we're joined by Hagar Chemali. She's the former director for Syria and Lebanon at the National Security Council at the White House. So, Hagar, we really appreciate your time. What can we expect in terms of the U.S. involvement here? Have we crossed a Rubicon, and the U.S. may be stuck now in a long, drawn-out conflict?
No, the reason I don't see this as the U.S. being stuck in a long, drawn-out conflict is because this isn't war by the definition of the traditional sense of war. In the U.S. government, certainly when I was there, this would have been known as a limited military operation, albeit significant, but and very powerful with very significant consequences. But that is what it is. It's a limited military operation that was seeking to take out Iran's nuclear program and aid Israel in its effort to do that. And I don't mean to diminish the dangers. There are dangers, of course, in terms of how the Iranian regime could respond, but they have no ability to respond in the traditional sense of war. They don't have their allies to do so either. Russia is broke and distracted. China's certainly not going to get involved in this for them. And their proxies across the region are all weak. In fact, Hezbollah itself said that they weren't going to get involved. And I laugh when I saw that, because it's not that they can't get involved. They've already been so decapitated by Israel. They know that if they were to try to get involved, Israel would finish them off once and for all. So while there are dangers, and the dangers I foresee, for example, are potentially efforts where they target U.S. military presence in the region. There are 40,000 troops in the Middle East. Or perhaps they activate agents and sleeper cells around the world. They do have that around the world, including in the United States. And they could try to activate them for certain terrorist attacks or targeted assassinations, as they have tried in the past. But remember that this is a regime at the moment that is extremely weak. It derives most of its power from its nuclear program. And at this point, they want to survive. And they know that the US or Israel would respond significantly if they were to take harsh action in response.
Hagar, Matt has been pointing out a really important point all morning, which is how long and drawn out would the tensions be? Now, part of this is around the nuclear non-proliferation treaty. And you had an Iranian official this morning saying that the most recent attacks had demonstrated that the existing NPT framework has been rendered ineffective. What does it mean to have this kind of a blow for that treaty?
Well, to be honest with you, the striking of the nuclear program is not what undermines the treaty. It was the regime's own enrichment. I mean, you don't enrich uranium to 60% in a hidden mountain if you have peaceful purposes for it. That's a farce. And in the U.S. government, for as long as I was in the U.S. government, working in counter-terrorist financing, working in counterterrorism, working to undermine the threats posed by the Iranian regime, which, by the way, pose about 75% of the threats that we face from the Middle East and Middle Easterners themselves. That's undermined by their own doing. We know that they were building a nuclear weapon, that was their target. And by the way, that wiping Israel off the face of the earth was their stated goal. In fact, they had a clock in a square called Palestine Square that counted down to the year 2040, by which they wanted to eliminate Israel. And the Israelis obliterated that clock, by the way. Death to America was their chant. So you can't, it's hard to analyze this without understanding the Iranian regime itself and its goals, which are rooted in a fundamentalist, ideological, extreme form of Shia Islam.
Hagar,
and that goal is meant to spread terrorism across the region, divide the world, and spread that extreme form of Islamic rule around the world.
Hagar, how much?
You cannot reason with something like that, but that's why they are the ones who undermine that treaty, not the United States or Israel.
Hagar, how much confidence do you have that the Iranians haven't developed a nuclear weapon or gotten hold of one from any of their allies?
No, they certainly haven't gotten a hold of one. That's something we would have known by now. Certainly the IAEA would have known that by now. In May, the IAEA put out a report saying that even while it was negotiating with the Trump administration, that the Iranian regime had surged its enrichment of weapons-grade uranium by 50%, and that they had enough material to produce 10 nuclear weapons. So we knew that this is the latest assessment, and the intelligence that we had was certainly when I was in the government, but also, by the way, from the Israelis. The Israelis have remarkable intelligence on the Iranian regime and what's going on inside Iran. We would have known by now if they had a nuclear weapon or if one of their allies were to try to smuggle them one. That doesn't really fit anyway within the goals of their allies. Don't forget that even though Russia and China are their allies, they don't want Iran to have a nuclear weapon. They want to have nuclear weapons. They want to remain powerful. And those are two governments that, while they might be friendly or they might derive benefit from being friends with Iran, they don't want to see an extremist Islamist regime. That's not what they've ever supported. They've fought against that within their own countries. And so I wouldn't be worried about something like that. I would be worried about Iran being close to one, because if they have a nuclear weapon, not only does it threaten the existential state of Israel, and by definition, by extension, the United States, because Israel's an ally, but it also would create a nuclear arms race across the Middle East, which is something we cannot have in a region as volatile as the Middle East.
Hagar, we thank you so much for your time. That is Hagar Chemali. She's the former director for Syria and Lebanon at the National Security Council at the White House. I want to take a check on markets here because really interesting moves across asset classes. You are seeing Brent crude now around $76.30. That is almost 1% lower. You got above $81 last night amid the concerns about oil prices as tensions brew more directly in the Middle East. You do have also the S&P 500 up 0.5%, but still below, just a touch below 6,000. A bid in the dollar and a bid in the bond market, both at the long and the short end, which leads us to our next guest, Dan Morehead, founder and managing partner at Pantera Capital. Before, Dan, you were a whale in the Bitcoin community. You were also, you still also are a Tiger Cub. And so when you look at the market right now, how would you be trading it across assets?
Yeah, I would say I think equities are rich relative to bond yields, and I think the bond market really has no way out. There's high inflation, The deficit is as large as it's ever been, and everything's as good as it's ever been. So if something bad happens, the deficit goes even higher. So I think it is tricky to be in the traditional markets, and that's why I do favor being in hard assets like cryptocurrencies.
So just to clarify for my mom, right, a Tiger Cub means that you traded global macro for Julian Robertson and then on your own. So basically one of the most important global macro traders of the world for a quarter of a century. How does this rank in your experience in terms of geopolitical events?
It does seem like it's probably contained, as the previous guest said, that there's really not much that Iran probably can do. So I think it will be relatively contained.
I realized by asking you this, you said cryptocurrency is a hard asset. A lot of people would debate that because they are now trading gold these days, right? So when you think about the safe havens that are out there, how do you think about Bitcoin relative to gold, relative to the bond market?
I think it's a great question. I think all these geopolitical issues highlight a theme we've been talking about for a decade, the separation of money and state. Back in the day, money was separate from the state. It was hard assets like gold. We've had this era where governments print money. They're printing a lot of it now. And I think we are going back to people trying to store their wealth in hard assets. Gold's great. Gold's doing very well. But digital gold, Bitcoin, is also relevant for people's portfolios. And it can't be undermined by policies, tariffs, wars. You can't print more of it. It has all those attributes that gold has.
We always talk about the dollar as a world reserve currency, and obviously it is still the number one choice there. But I guess my thinking is you have a percentage weight to the dollar and some to gold and the euro and the yen and the Swissy and Bitcoin now. That weight has obviously grown from zero to wherever it is now for Bitcoin. Is it taking from the dollar?
Oh, I think it is. And remember that reserve currencies changed a lot of times over the years. It used to be the Portuguese escudo and the British pound. It's the dollar right now. It could easily be cryptocurrency in the future. And you're seeing governments now.
But it's not binary, is my point. This is what Chemali and I talk about every morning. So it's not like it either is or isn't. It's just a bigger part or a smaller part of your portfolio, right?
A great way to put it. The U.S. Stores 11 million workers' years' wages in gold. I don't see any reason why they couldn't store the same amount in Bitcoin in 10 years. And so I think states, U.S. government, foreign governments are all going to have more than just one reserve currency, the U.S. dollar plus Bitcoin.
What do you think the value of stablecoin is in this environment? We saw, of course, a recent listing. Matt was always saying if he was the investment banker for it, he said he would wait for longer until you got that higher price. But there's some debate around that.
Circle sold shares at $31, and it's trading right now at well over here, $276. I feel like they left a lot of money on the table. Other people tell me it was a very small float and difficult to short. But
is it safer than Bitcoin right now to be more involved in the stablecoin world if you're a large investor?
It's a different use case. We've been investors in Circle for 12 years, and I'm so happy for Jeremy Allaire and the team. But you think about it, we like investing in Bitcoin because we think it will appreciate. It's on average doubled each year for 12 years that we've been investing in it. But stablecoins are better for cross-border payments, storing your wealth if you don't want that risk. So they both have really important use cases.
You're raising $1 billion right now. So how is the fundraising environment, and when do you expect to close that?
Yeah, so fundraising is much better now. I think the change in the administration has really kind of taken away some of the kind of uncertainty about regulatory issues. And so big institutions are more likely to want to invest now. We're also investing in these digital asset treasury companies. We led the first DFDV and Cantor Equity Partners, and we're raising a fund to invest in more of those because there's a huge amount of appetite in the public markets to get invested. And so far, there's still only a few publicly listed companies like Circle, Coinbase.
But the fundraising, are you almost there?
Oh, I think it'll probably be over the next year. It takes a while.
Interesting. Well, we'll keep an eye on that with you. But, I also want to point out that not everything has been rosy at all times with new listings in the space. SharpLink in particular was a sharp decline after you saw that initial registration. Do you think that you're going to see more of that for treasury companies, where you see maybe a pop and then a cool down after you see perhaps dilution that investors are expecting with some of these companies?
Well, you see with MicroStrategy's 100 billion market cap, there's such an intense demand to invest in crypto via the public markets. And in 10 years, there's going to be hundreds of public companies in the crypto space. Right now, there's only a few. So I think you will see potentially excessive speculation where things go up a bit, but they're all still trading way above their net asset value or their holdings. So the space is still doing quite well.
All right, Dan, great having you in here. Really appreciate you joining us. Dan Morehead there of Pantera Capital. Let's get a look at some of the single stocks moving at this hour. Homebuilder stocks gaining as Treasury yields retreat. You can see Toll Brothers up on a luxury play there. Only 1%, but it is interesting to see it rise today. And then Northern Trust, Chemali.
I think this is fascinating. It was a Wall Street Journal report that BNY approached them about a possible merger. Remember, BNY has been a darling stock of the financial industry. They've been going through a lot of change under, let's say, a relatively new CEO. But these trust companies have long been mergers and acquisition rumors for, let's say, the last 10 years.
I also think it's fascinating to see Hims and Hers getting crushed off 30% to $44 a share. This after Novo Nordisk ended its partnership with the company, and they just announced this partnership in April.
Yeah, crazy. This stock has been incredibly volatile off the news that we've seen in the space this year. And Matt, you know, there's also, I would want to point out, my humble tease here. This week, we actually have also, I want to point out our latest episode of our Bloomberg Original series, Bullish. The next one comes out tomorrow. It's all about risk strategy, the intersection of finance and gaming. It airs at 6 p.m. tomorrow. It features Saba Capital founders Boaz Weinstein. This was taped the Friday of Liberation Day. So actually super interesting, of course, known to ride volatile markets, and of course looking at election betting markets as well, or prediction markets rather, and how it plays in to his strategy. Take a quick listen.
The reason blackjack is very similar to what I'm doing in closed-end funds is what I love about closed-end funds is I know the counts. There's the counts in blackjack, there's the discounts in closed-end funds. You know, we're sitting right now at flat count, actually. When there's a discount, the investor has an edge. And in blackjack, when there's big cards to come, the player has an edge. And so we know what the edge is. In blackjack, we know what the odds are. In closed-end funds, there's uncertainty, but we know how cheap we're buying something.
Tesla's robo-taxi debut kicked off yesterday in Austin, Texas, after being delayed over safety concerns. That's why a human safety monitor was riding in the front passenger seat for the launch of a handful of autonomous taxis from Tesla. Service is limited to a small portion of Austin and unavailable in the rain. Let's bring in Bloomberg's Cara Carlson out of Austin, Texas, where she covers the EV market. And Cara, it just seems so underwhelming considering this is a city in which Waymo operates, what, hundreds of autonomous taxis without a human monitor and in the rain already.
Yeah, you know, Waymo operates about 100 in Austin, you know, in other cities as well. They have their own operations. It's not entirely clear yet if the rain was the specific delay yesterday. There was some sprinkling, but they did push back initially. We're not entirely sure when they were supposed to start. They could have started as early as 6, then they were going to start at noon, and then there was a little bit of rain before they started at 2 p.m. So that was possibly part of the delay, but it did end up being a very small launch with just about a small group of influencers and retail investors that had access to the initial launch.
But what are the challenges to a larger rollout ultimately?
Yeah, this is something that investors and analysts are going to be watching really closely in the next few weeks and months is can Tesla actually scale from here? A lot of them said, you know, it seemed potentially promising, but it was about what they expected to see. They're hoping they can actually scale out not only in size of their area, but, you know, more public launching, more vehicles on the road, and they'll be watching closely to see if that is possible.
All right, Cara, thanks so much for joining us out of Austin. Cara Carlson there covering the Tesla robo-taxi launch, which certainly has been enough to drive the shares 10% higher. Coming up, the world awaits Iran's response to U.S. strikes. We'll bring you the latest developments next. This is Open Interest.
I can assure you the administration is actively and closely monitoring the situation in the Strait of Hormuz, and the Iranian regime would be foolish to make that decision.
That was White House Press Secretary Caroline Leavitt speaking earlier today, speaking, of course, about the Strait of Hormuz, where roughly a fifth of the world's oil supply runs through, which is, of course, why investors are watching it. Joining us now for more from D.C., Bloomberg's national security reporter Courtney McBride. How closely are you watching the Strait, and, of course, what is expected out of Iran's response?
Well, we're certainly watching the Strait of Hormuz, but from a national security perspective, I think a lot of the focus is on the potential for retaliation against U.S. forces in the region.
What's the likelihood that we have a protracted involvement here, or are people in D.C. saying this really is just one and done and we're out?
I mean, a lot, I think, depends on what the Iranian response may be. The president, the defense secretary, the chairman of the Joint Chiefs have all said that this was meant to be a very limited, targeted strike on Iran's nuclear program to prevent the Islamic Republic from achieving a nuclear weapon. But the president has also warned that attacks on U.S. forces would be met with a very serious military response.
There's the short term and the long term. Matt was talking about the Nuclear Non-Proliferation Treaty, the NPT, and the blow that it might have faced over the last couple of days, or the blow that it did face. Where does it go from here, and how does the U.S. ensure that there isn't longer term damage here?
Well, I mean, I think a lot of this is going to have to depend on diplomacy going forward. The Iranians have certainly accused the U.S. of dealing a very serious, if not fatal blow to the NPT. Much of that remains to be seen. Obviously, there are lots of other countries that are involved in the non-proliferation regime, rather. But you know, we'll have to see where potential off-ramps or negotiations may go.
If the Iranians respond aggressively, what's the likelihood that they have the support of allies like China and Russia?
Well, much of that has really been very rhetorical in nature. You know, China and Russia have been very, very, supportive of Iran rhetorically, but not necessarily committed to mutual defense. China has said it's interested in trying to reach a peace settlement in the region. So we're not necessarily looking at some sort of superpower battle. I mean, Iran is very isolated internationally.
Courtney, we thank you so very much for joining us this morning. That is Courtney McBride in D.C. We will be looking out for any updates throughout the morning. And we're going to get a check on the markets now, because it has been a green day in the markets. Now, a lot of calm. The S&P 500 off of its session highs, but pretty close, up about 0.4%. The 10-year yield facing a bid of roughly 6 basis points lower on the 10-year yield. Really, the short end and the long end facing not only a safe haven bid, but of course, at the top of the hour, we saw Fed official Michelle Bowman speaking about the need to lower rates sooner, as early as July. Brent crude trading at a 76 handle. This was as high as $81 above that just last night. We are watching a cooling of Brent crude. Of course, gold, though, still has a bid in that.
All right, coming up tomorrow, Lisa Shallett joins us, Chief Investment Officer at Morgan Stanley Wealth Management. This is Open Interest.